Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, as always, man, thanks for having me.
Gold is taking a pounding. It hasn't been a dramatic drop, but just a slow bleed, I think. What's the situation there?
Well, it's pretty much exactly what I had said or warned about with the 9-year cycle. We knew that, there was a possibility the 9-year cycle low still was ahead of us, and that was the hope. And we talked about, that if the 2016 low proved to be the 9-year low, that that was the worst scenario, the most bearish scenario for gold. And, we have discussed that. I think that it's been a while now, but it has proven that, yes, the 16 low was an early, I say the 16 low, the late 15 low, early, it was depending on what contract you're looking at, it was 15, December 15, early 16, low was, the 9-year cycle low. And every indication is that 9-year cycle advance has already peaked. And, once I saw the warnings of that being the case, that's when I started warning that was the worst possible scenario. And now that has come to fruition. I mean, that's definitely what appears is going on, and that's why we've seen the meltdown that we've, or I say meltdown, that's a strong word. Like you said, the slow grind. Looking at the XAU and the HUI, they're back to levels, late 2016 levels. So they've been hit as well. And, I think that's pretty much the cause, the 9-year cycle top. There will be intermediate term bounces, short term bounces, and they should all be counter trend.
How are gold miners holding out?
Well, that's what I'm saying with the XAU and the HUI. They're not holding out well. They're back to late 2016 levels. They have been, they have felt the heat. They are, not doing well at all. And that's what I warned about. That was one of the things we looked at as an indication that this 9-year cycle top was occurring, in conjunction with the early 9-year cycle low, was the performance. Remember, we talked about the performance of the miners in gold, and that it didn't, it didn't look right, didn't smell right. And then as it developed, it's all drifted lower.
How manipulated is the gold and silver market?
I have no idea. There's a couple of markets that are actually, when I look at it cyclically, that are doing pretty well, what I would have expected them to do based on the cycles. Gold, looking at the cycles, it's doing what it should do. The only wrinkle there was the early 9-year cycle. The rest of it has been, pretty much unfolding according to the statistical and normal cyclical rhythm. So I don't see anything abnormal there. When I look at the dollar, that's one of the things. I remember one of the very first shows this year, you talked about what was one of the big moves or whatever, unexpected or surprise moves for the year, whatever, or however you said it. And I said that it would be the dollar. I thought that there was a higher degree low in the dollar. So the dollar is doing exactly what we thought. If there's something that's a little odd, I'm surprised by the fact that commodities held up when I say commodities in general, the CRB held up quite as well as it did. I do think that we're making a longer term cycle top in the commodity complex now as we speak. And I think that finally oil, I need to see a little more confirmation, but it sure is looking like that longer term top in oil has finally occurred. So in general terms, it looks like the commodity market, while it held out a little longer than expected, that it's performing pretty much according to the statistics. Equities is another story, and we can talk about that if you want.
We'll have more with Tim Wood right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, we have a question from Randall Hansen that'll probably play right into the equity market. He asked for you to do a Dow Theory update. He says, with the passing of Richard Russell, you are the preeminent practitioner of Dow Theory.
I appreciate that compliment. Yeah, we had a very, very, very obscure Dow Theory primary bearish trend change back in April. I talked to Bob Prechter about it. He and I are going to do an interview at some point and discuss it, but Bob has all the original writings from, the Dow Theory founding fathers as well, and he agreed with me 100% on that trend change, as well as the obscurity of it, if you will. And then I saw one other, the Aiden sisters. They saw it. They got it right. And other than that, no one has touched that, recognized that, and I understand why. I mean, number one, it occurred by the, what's the old saying, by the skin of your teeth. I mean, it was marginal. Now that said, it's there, but it has not been confirmed with the structure of my cycles work, which I want to see. So again, that's not speaking out of both sides of my mouth. It is there, but it also just adds to the fact that it's somewhat obscure. Since then, according to the writings of our Dow Theory founding fathers, what they said is that, once a trend change occurs, it's assumed to be in force until it's reversed. Well, what does it take to reverse it? Well, you have to move above previous secondary high and low points, or below previous secondary high and low points, with both averages on a closing basis in order to reverse it. And in any time you're operating between those two levels, they say that the market is just of no forecasting value. It's just between those 2 points, and whatever the last signal was stands, if you will. So that's where we're at. We've been in no man's land. That has occurred, and as obscure as it is, it's there. We've been hovering in what actually, according to Robert Ray and the Dow Theory founding fathers, would call a sell spot, but then nothing has materialized. So it's just kind of been a levitation. We're waiting to see confirmation of it. Either it's going to get one or two things going to happen. Either the signal is going to be confirmed, or it's going to be reversed here. In the meantime, it's the jury's still out on it.
We'll have more with Tim Wood right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, copper has taken a pounding over the last couple of months. What's the story there, and was that predicted?
It's just, well, I don't specifically follow copper, but it's the same as with metals and the general anticipated top in the commodities complex. So, yes, in a roundabout way, it was expected, but not specifically addressed. Like I said, there is, with the metals, there's the 9-year cycle, which every indication is that it's in place. I say 9-year cycle, the 9-year cycle top, and every indication is that it's in place, and that does include copper and all of the metals. But then with the commodity complex in general, there's a 3-year cycle, and all of the evidence is not in yet, but the evidence is certainly looking like that 3-year cycle top there is in. So in general, that's what's going on with copper, is the pressures of those cycles.
China consumes about 50% of the world's copper. Is this an indication the Chinese economy is slowing down?
I guess indirectly it is, and certainly if you look at their markets, looking at, it's been I don't look at it every day, but looking at the Hang Seng, and the last time I looked at some of those markets, the Shanghai and so forth, yes, it looks like that they're actually leading the U.S. market.
Well, China had taken over second place in the world equity market, and now they've fallen behind Japan, so they're in third place. So they have had a bit of bad news there.
Yeah, and what's going on? If we can talk about, I know it's kind of boring and sounds kind of technical, but you talk about market structure. What I think is going on, the whole thinking all along has been that everything was moving into a massive top. We talked about the bubble, and nothing there has changed. We've had the back in January at the high in the indexes, specifically the Dow Jones Industrial Average, we saw the most overbought reading from a simple monthly RSI going back to, I got stock prices going back to 1800, U.S. stock prices going back to 1800, and of course the Dow Jones Industrial Average data going back to 1896. And we saw the most overbought reading based on just a simple monthly RSI since the inception of that data in 1800. And then I've talked about some of Hussman's valuation models and so forth. So by most any measure, it's certainly, a bubble. But it doesn't feel like it because it's held up so long, and nobody thinks it is because it's held up so long. And that's one of the other things I warned about. I said the longer it lasts, the more dangerous it would become, because the extreme abnormal becomes normal. It feels normal. And so that's the environment we're in. And what I think is happening, that all said, is that when you look at the structure of like the Hang Seng or the Shanghai, or even in the U.S., you look at the housing market. We had some cyclical structural developments over the last, since December, January, that indicate that those particular markets and some of the subsectors like housing and so forth are beginning to soften. They've rolled, that they have turned, in fact. And yet we see the mainstream averages like the Dow Jones Industrials and the NASDAQ and the S&P and so forth, they've continued to levitate. The S&P has done structurally a little better than the Dow. The NASDAQ has moved to a new high, but that levitation has, I think, masked the overall setup that is trying to take hold here. And like I said, we have this very subtle Dow Theory primary bearish trend change that's holding on by a string. We have the overall commodity complex that's trying to peak, and I think oil is also finally there. Maybe, like I said, we need a little more confirmation there, and then housing, some of these subsectors, and so I think we're headed. It's like turning the battleship, as they say. I think what we're seeing is a massive topping process that is being masked by the levitation of equities.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests, like the one that we just posed to Tim, can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.